May profits be upon you. Good morning from the East Coast of USA. It is 9:17 in the morning over here, so I'm hoping that you're enjoying your weekend. Hey, we're going to take a look at Euro USD. Euro USD, right? First, let's take a look at that RT money meter. The RT money meter tracks the rate of change of each individual currency from a futures perspective, all right, over a period of 15 weeks, about 3 months. And I update it every week on the weekends where the currency strength does not change, okay? And what do we see? For the USD, we had a little fall off from last week, 9.41 last week to 6.89. What is that? What is that? All it is it's disappearing. I hate it when I do that. I really hate it when I do that. Oh, you know what? I'm going to start using the I'm going to start using a different annotation. All right. What we see is just, the USD going up, right? And we see the pullback. That's all. All right. Doesn't mean that there's a reversal in the market or whatever. It just means it's pulling back, a retracement. All right. After each correction, after each impulse comes a correction. That's all it is. So no need to go nuts. Okay. Now, what do we notice about the euro? The euro went from minus 844 to minus 619. This one did the opposite. It's been downtrending for weeks, right? And then we have a pullback. That's it. That's all that happened. A little pullback action. All right. And we'll take a closer look to see, are we finished with this pullback or what? You know what I'm saying? So we're going to take a look at that right now. Let me tell you this quickly. The monthly, the trend is down. Each month, it just, look at how hard that drop is. All right. Breaking important structures here. All right. There's, we don't have to go deep diving into that. The weekly is the same way. All right. We come down, based out here, popped up for what? A lower high to make a lower low. We took out that low. So we are definitely still bearish on this. All right. We look at the daily. There is no mistake in this. This is not an uptrend on the daily. We're still bearish. Okay. All right. Everybody understand that. All right. Higher time frames are showing bearishness. All right. Now let's go to our 4-hour where we make our money. Okay. I have these dotted because this is the higher time frame structure, the lower low, the lower high, and a new lower low. This is not higher time frame market structure. All right. This is the structure, swing structure, the swing low, the swing high, the swing low. You understand? This is internal low and high. Why do I say internal? On the daily, it's inside the trading range. The trading range is defined by the swing high and the swing low. That's the top and bottom of it. Anything in between that is internal stuff. Okay. So that lesson's over. All right. I'll go into more detail about that in another video. Request it. Give me some feedback in the comments section if that's what you want to know more about your structure, because a lot of people, it took me a long time to get it. All right, let me mention something here. The COT report. What am I doing? The COT report from the 19th, it reported that the banks are 55% short. All right, 55% short, 45% long. All right, they're leaning more towards the short side, and they closed 1,365. They closed longs, over 1,000 longs, and they added 16,136 shorts. They added shorts. You understand? So, last week you see that reflected in this the, last day. You can see, you're going to see you can see that the banks are trying to go short, but look, it's been sideways, right? This is sideways. This is what I'm going to tell you to do. This is what I'm going to advise you to do. I'm your consigliere, right? Consigliere, all right, consigliere, excuse me. All right, what I want you to notice is the trading range here on the 4-hour. This is the trading range. We need to get above this 50% for me to look for shorts, because this is premium price, this is discount price. We want premium prices when it comes to shorts, all right? We're trading just below that, all right? What I'm going to do is I'm going to wait for the higher time frame, the higher time frame. What I'm going to do is I'm going to wait for the higher time frame. I keep saying that. I'm going to wait for price to take out this what do you call this supply zone. I'm going to wait till price takes out the supply zone, all right, with a close, a break and close of the body above, not just a wick. All right, I need to see a break and close above that. Okay, and once it does that, I know that price is going to fill this fair value gap, this imbalance, and touch up here at this supply. We're heading that way if I get a break and close of a body above. If once we take out supply, you automatically got to start looking for shorts. And what you want to do is wherever the demand is after this is broken, that's where you want to take your long position. All right. Understand this. This is a counter trend trade. The trend is bearish on the higher time frames. I'm looking for shorts, really. All right. But if we get a breakout, we get this zone here taken out, this supply zone taken out, why would I be looking for shorts? The supply is not in control. Demand is. All right. I like this. You see this little curve here? All right. That's because that's a strong low. Why? Because it broke structure and took liquidity on the way up. Price came back, filled the fair value gap. Boom. All right. That's not a good line at all. Came back and filled the zone, filled the fair value gap, and now we're on our way up. But doesn't mean we're going to take out this this supply zone just yet. I want to see it violated, and then come back to the demand, and then I'll take a counter trend trade long. All right, just looking for 15-minute. I would be looking for a 15-minute confirmation trade up here once it violates. All right, now as far as shorts go, I need to see my confirmation. I need to see a confirmation here. All right, I'll look on the 15-minute time frame. All right, and what am I looking for? A push higher, a pullback, a higher high, a low that breaks the pullback low, and a return to impulse. Boom. I'm looking for this. I need to see that broken. I need to see that impulse, the correction, and then the impulse. All right. I need to see that here. Easy to understand, right? So that's what I'm looking for here. And I'll be looking for that on market open. All right. If it comes up here, and takes out the liquidity, because these are relative equal highs up there, all right, then and we get a close up above there, hey man, we're going to fill in, and I'm going to be looking for the confirmation for longs. All right, that's it. Wait and see. Get your confirmations and wait and see. All right, I love the fact that price held here. All right, we didn't get a close at the midpoint of this demand. All right, if price comes down here and takes out this demand, all right, a conservative player will wait for price to come back to the supply that's left behind and take a high probability trade to the downside. Once you take out this demand, just wait for price to come back, man. This is going to be high probability. But we have some bullish momentum going on. All right, so we could see this. All right, just check out the Dixie and you'll see the inverse. I'll give you a peek at it. All right, I'll give you some bonus coverage here. All right, and you can see on the 4-hour, price has topped out here. We took out, let me get my writing utensil, excuse me. We took out the, I don't know what just happened. All right. So we took out, we're in this demand here. All right, we haven't gotten a close below. All right, but a 15-minute confirmation would tell us that we're going to come down and fill this void. All right, and come down here and test this this demand zone down here. All right, and once we do that, we can take the confirmation trade as it leaves and comes back. We can take the confirmation trade to the upside if you're trading Dixie. But what I use the Dixie for is an indicator for the majors, the Euro USD, the Pound USD, and Aussie USD, and NZD USD, and USD CAD. I go the opposite way. So I'm waiting for the strength to come back. This is an impulse. This is a correction, and I'm looking for the impulse to the upside. And this is where I would be looking for it in discount price on the Dixie. You understand? You understand what I'm doing here? The Dixie is the inverse of the Euro USD. So if it closes this gap and we get our pattern, you understand? If we get our pattern, it's going to be a high probability that price is going to go up on the Dixie, but we're looking for price to continue in the bearish trend, the overall bearish trend on the Euro USD. We need to see that taken out first for a confirmation trade. We can catch the confirmation trade on 15, enter in with a nice stop loss, and we can go on a nice small tight stop loss, and we can take it on down. All right, so wait and be patient. Let it develop. Don't just jump in the middle of this consolidation, because price can turn either way at any time. Wait until you see a break and close above, a break and close below. That's it. I will put this video and the ones that are going to come after it today, I'm going to put them all on a playlist so you can just press play and just watch all of them. All right. I got a bunch of trades, a bunch of markets that I'm going to cover today. So I'm looking forward to seeing you, and do drop a comment, give me a shout out, say hi, or say, hey man, I'm making money with your analysis, or I'm not doing anything good with your analysis, you stink, whatever. You know what I mean? I would like to hear from you. I'm always looking to improve videos for my viewers. All right, I'm going to leave on your screen the weekly outlook from the futures perspective on the individual currencies. I cover that, all right, with the rtmoney meter and all. I'm leaving that on your screen right now. Check that out. I will see you in the next video. Mm.